So we're going to be talking about today's events, right? The market did something crazy. The boy Jay Powell got talking, got running his mouth. Market started flipping and tumbling. It went all over the place. So let's talk about why you shouldn't trade today. Should have trade? What kind of trades could you take? You know, let's get active. So I always start with the overnight technicals, right? We really looking at it. You already know how we start the week off, so we ain't gonna go all the steps, but we're just gonna go some of the steps. So we're gonna look at Monday close. Oh, it's here for Monday close. Great. Talking about actually, yeah, market open up over there. So from there, we're gonna go Tuesday close. Yeah. From there, now we're gonna mark our levels out real quick. Clearly, this is your Monday low, right? Go ahead, because we want to just, identify the range. The main important piece is identifying the range, right? This should have been our Monday high right here. High. All right, and we're gonna mark out Tuesday. We was cooking on this last night, so okay. So when I walk into the market, and the first thing I see in the morning, we haven't hit no levels at all. Like this is Tuesday now, right? Coming into Wednesday. We still inside the Tuesday range overnight. Yes, you should be get some consolidation from the Asian market, but by time midnight hit, you should start getting some movement in the London. The London was not there at all, non-existent, right? Zero effort. Nobody was home. Oh man, nobody was home, so they stayed in this channel the whole entire time. So we'll go here. All it broke out there. But this is the channel that they stayed in. Let's measure how many ticks that is. So it's a 53 tick channel, right? $13.25. That's the channel that they stayed in. It's the high, this is the low of that channel. Right? Now, paying attention to that, that should tell you when you come in overnight, I'm looking for a breakout here. Looking at a breakout, we're inside of previous fair value gap off the chart. Hanging out here, what's going on? Projection. Eventually, we start breaking down at 9 o'clock after the 8:30 news drop, right? So let's get down to an intraday time frame. Swing over to the 15-minute chart real quick. So you waking up, you see the channel, right? If you're good at range trading, of course, play the range. You have targets now, right? You got highs and you got lows. But prior to this high getting put in, you simply see the channel, see high, see low. You see them bouncing up. Well, 9-10 are gonna go to the high, go to a gap, fill that. They're gonna go take out liquidity, whichever you want on the table, figure it out, take trades. Now, one important thing is looking at your oscillators. Here for a reason. Oscillators telling you, hey, something is not happening. It's some rough and gazy stuff going on. If they're tight like this, it's telling us a lot of consolidation here. Nothing really going on, right? There's nothing really happening. You need to watch out. Don't take it. Don't take the trade or be smart about where you're getting in the trade at. I want to get in at highs and I want to get in at lows, right? So highs, lows. 9 out of 10. If it's not breaking out of this channel, I want maximum amount of profits. If I getting in here, trying to take it up to here, what is my risk reward, right? So let's long position real quick because that wasn't right good entry. Right? to do the 3 candlestick order block continuation. Stop loss at market structure, and you'll say, oh, what's my max take profit? 27 ticks. Well, guess what? You got a 1-to-1 here. I got to risk 27 for 27. That's a bad idea, right? So now I'm gonna have to say, well, now I got to put it at the bottom of doji. So I'm gonna risk 9 ticks for 27 ticks. Maybe you can make that work. Maybe you cannot, right? So you got to look at it. How are you going to play this? And you got to ask yourself those questions like, is this actually worth taking? Or should I wait till we get to a better location? Technically, we hoping for the top of the channel. But in this case, you can actually see it didn't quite get there, right? It got up to a high of 21 ticks from this break. So you play the breakout of this pattern here, the 3 candlestick order block continuation, right? You would have played that pattern, you would have actually got 20 something ticks for that of the risk. So you can risk less. I said, I'm just gonna have a tight stop loss at the wick. Boom, take the breakout, see what I can get. If you want to do scalps, load the boat up on your contracts. No, that may be would have been fine, unless you would have been playing down here and say, well, they broke previous structure over here and here. From there, we get a reaction. They turn it around. Okay, they go up. I'm going to take the trade over here, right? So now you're looking at your trade being over here. Stop loss at structure. Here. Maybe I can finish it there. That's a little more better risk to reward. Now you want 30 ticks, right? And if it actually go to the high, 36. So you still got to risk a little bit more, but you at the bottom. It's not, oh, I think you can risk here. Unless you also look at this fair value. So just pick and choose, or just not trade at all. Super scalp it, sit out, not trade at all. There's nothing wrong with that. I like a nice, good, steady trend, or I want a nice reversal to clearly set me up for success. If I don't feel like I'm being the best me I can be or the most successful, I'm not going to take a trade. Today, I did not trade because I came to market and I did not see a clear setup. It was all garbage. Okay, so here, looking at the market, we see what they did, right? Boom. Swap highs. We had equal lows here that came back into the zone. So you gotta understand what these things are doing here. These blocks, right? They came down a little bit deeper because they want blocks. Okay, cool. So you got this cluster, price come out, boom, they like to return to you. So now you got a tweeze about it. Now they gave you equal lows, they return, boom, not really breaking structure, and they say, hey, we're gonna run up. The moment they did not break structure, that's how you know it's not gonna be a continuation down right away, right? But that's the finesse. It's already telling you where they've been at in this channel, right? Because that's our fair value gap that they haven't broke past the 50% level. So what they did was the people who went short here because they seen everybody breaking down, they seen consolidation, right? If I'm looking at it, I'm saying, hey, solid consolidation. They already been consolidating here. Ooh, consolidation breakdown. I'm gonna go ahead and sweep the low, and I'm gonna play down to Tuesday low, right? Traders looking for that Tuesday low to be taken out, but that's not happening. They hit, boom, take market liquidity, and then they dump, right? And this happened what? At the news break. Look what they did. So as the news dropped, price came up, swept. Next 15-minute candle, what happened? That's why you want to wait 15 minutes for price to close. You had a false breakout. Next candle, boom, reverse, hammer at the top. Typically, you see one of these candlesticks at the top of an uptrend is coming down, right? So from there, price dropped, they swept the lows, came down into this zone here. Boom, came right over into this cluster, and then they reversed at noon. Lunchtime, baby. Much time, baby. Boom. They got their little junk going on. But here's the most interesting thing, right? You see another two candlestick order block rejection. Highlight these. You see how they tap back into that on a lower time frame. Me and Freeman was talking before we started up the recording. We noticed, like, hey, what is that? It was a fair value gap. On top of that, it was another back-to-back fair value gaps on a 3-minute chart. On a 15-minute, you'll see a rejection block. There's no increase. They came up where they revisit back to this area. Where was that? Consolidation. That was your London zone, right? That was your Asian zone consolidation point. All they did was come back, take that level out, right? Look at that. Smooth. Because they know for sure when you went short, guess what? You left a stop loss. You said, hey, you looking back, I want this. But they did a V-shaped recovery on you. But next the kid dropped it back down. Panic set in. A lot of traders got out of their plays today. And I mean a lot. But you wasn't down here waiting with the bag, ready to snatch them, ready to grab them and hold them. You got finessed out of your position too as well. So this is why you got to be smart about when and where you trade at. Jerome Powell speaking today. It wasn't worth it. You can sit back and just not trade. It's not worth the risk. By putting yourself in these positions, you are just putting capital at risk for no reason. Because you was taking a long position saying, hey, this is the reverse, and they do something like this. You gotta panic. I don't care. A lot of people will panic, especially in that risk. Look at that drawdown on the ES 80 ticks. Who's sitting through it, right? But you're not a sniper trader. You're not patient. You're not looking for setups. You're not looking for buying opportunities. You're not looking for maximum potential. You would have missed this block here because you're on a smaller time frame scalping the life with the chart, which is, cool when it's cool, but times goes bad, right? So that's why it's always important to pay attention to that. Now, let's back out to the hour chart and let's look at what the oscillators are saying, right? So when you see these histograms tightening like this throughout the whole entire day, you really get this one little moment of volume here and here, right? It's telling you they're gonna reset. Anytime you see the histograms tight like this, these K2 lines are gonna come back to neutral because price is resetting. That means you're in a channel, it's low volatility. As you see, price really stayed into a channel. It got beside itself, took Tuesday high, came back, barely tapped past Tuesday low. We closed inside bar day, right? It's an inside day. What they're gonna tell you, let's back out to a daily chart. Right? We can open. This is the range. We got a range expansion, but we did not get a breakout and close. I like to see breakouts and closes, right? I want to see the candle breakout and close on one of these levels. They're going to tell me we got continuation. If it closed back into that daily range, that means what? 9 out of 10 may get a little chop and some confusion. Look like we got more push to the upside, but that don't really mean nothing if they hit their target objectives. That upside push that they did. Like, where did they go? What did they rebalance? And why should we care if they're gonna go back up there? That wick is very tempting, so let's look to the left and see like all right, we sweep all-time highs. What was it, right? All right, cool. We clearly got over that level, and we should be in all-time highs. Right? To the left and to the right. So let's go to the weekly chart real quick. Boom. We up there. It's a new high. Why we got new highs? It's the okie doke. Yeah, thanks for. So we got all-time new highs, and you already know what happened with all-time new highs. This was the last all-time new high we had, right? In July. We had a nice little retracement. Back up here again. Right? So let's clean these drawings up. Now let's look at what do we have here. It's the old high, new high, close. Got 1 day left. We close back in here. Now we got a top. Are we going to break down here and go to the dirt? Or will we continue pushing up? Personally, we don't have pushing up. I want to vote the vote. I'm very biased, I'm a trader. The window out because those trades just feel so much. So what are we gonna do? We didn't close and breakout. We really don't have no good news. Amazon demanded for the employees to come back, so we should see around layoffs, which get them more money to operate. I think they trying to force people to quit so they don't have to pay the unemployment costs. You got companies doing that with interest rates going down, more rising in mortgages. We'll see what they do. The sauce is down. Risk to reward, baby. Look, if they did this, let's keep going, right? This last pivot point, I got you, Rod. Want to know where the sauce at? Boom. This pivot point to this pivot point, right? It did a 78% retracement. So high to the low, that thing moved 2000 ticks. Okay, cool. So let's say if history repeats itself, or like to rob, one of the two, let's run another field. And let's say, hey, you're gonna do a retracement, probably to 60%. Well, you're still looking at 400 points down on the ES. So maybe yes, maybe no. If we do a 50% retracement, we're looking at 1,300 points, right? Or let's say you're gonna go ahead and do that. Bad news, Susie. We back here at the bottom, 2,500 ticks. So get it how you live, my boy. Yeah. Yeah. So and get real spicy up here at these levels. We're in the clouds, baby. We don't know what can happen. Hope y'all got your parachutes. Parachute at. There you go. Boom. Trying to get it up, left it. Boom. There we go. Yeah. Jumping out the window, baby. Jumping out the window, baby. Yeah. Yeah. Too lit. Mm-hmm. Yeah. I'm looking for some bearish action. All right. We're gonna go to that Nancy, that EQ. You should probably see. Now look at this, right? With all the tech companies, see the S&P got those 500 companies holding them boys up, but this tech, y'all, man, listen, you got your shift. The news couldn't do it. I don't know what will. So we haven't visited all-time new highs. We struggling. What's going on? Nvidia, the boys in a 115 by 115, right? Well, let me go to my room. Well, what the boys sitting at? Yeah, they 113 right now. Huh. Them boys ain't cracking. I don't know who will, right? Apple, what Apple doing? So let's go to these other charts real quick and I'll tell you what the NQ should do, right? Boom. Apple, market shift. That's a failure swing, right? They haven't put in new highs and they slowly break it down. Now we're seeing these boys break down some more, right? They trying. We want to see what they do with that candlestick right there. I want to see what they do with this. But at the end of the day, they going down. All right, let's go over to Microsoft. It's cracking over there. Same type pattern, right? The boys tired, boss. Tired. Even if they do get back up here, look at that block. Wait. On the weekly. See, the weekly stand for snatch your wig off. Then the sun setting up on the weekly, that's what get your wig knocked off right there. Let's go over to Nvidia. I know this is your favorite, Shantae, but they got to go on sale too. Got the failure swing. They got the failure swing. Okay. Then they changed the angle. They tried it again. Yes, sir. Mm-hmm. Yeah. So they ain't looking healthy. They got flips on. Now we talked about so far before you got here. Yeah, I had that conversation. Yeah, we'll go back over there. Yeah, I go to my chart. The boys got the same block set up, right? But we also see, once again, they struggling right here. Everybody got that same little struggle pattern. So, you feel me? Same little V shape. You already know V shapes be temporary. Anytime something recover like this, it be temporary. If you don't get a nice little push up, they ain't sweeping no highs. You already know this is market shift to the downside. It's over, right? So you just keep going down the list, and it'll let you know what time it is. Yes, sir. Failure swing all day, every day. Fail W. Yup, not as meta. I don't know what they got. I don't know what that boy Zuckerberg cooking. They smooth, right? They the only people probably holding them up where they at now. Mm. Yeah. They cooking a little bit, but they starting to top out, right? Starting to top. So we got to see, like, all right, got the little, coming back down, trying to find a range of what zone they're gonna fall into. We was setting up a nice little bump and run, but like they kind of find a little zone between these two lines here. Now, what they gonna do depends on what Zuck do. Like what he gonna do. I don't know what he got going on. If he work with the government, he'll be all right. If he do something else, well, you already know what time it is. Ooh, yeah. Costco doing his thing. Costco doing what it need to do. Costco's at all time highs. But I don't like how this candle look. We got one more day. Now, if this candle look like this, we coming down. We'll get a nice little retracement. Uh, I don't hold my breath. I'm play this one tight because Costco, it don't like to come down like it should. They stage it with the retracements. So I want to pull from there. Typically, I would want to pull from here if they act right. Say, hey, they're gonna come back, revisit this zone, that'll be the 50%, blah, blah, blah. Because look at last time. It's this one. So they gave you that, right? But then it makes them acting funny. This hopefully they'll come back down to this block to be a good retracement and some investors can load up here. So either 50%, or back down. Yeah, I think they should. They'll probably revisit discount for sure, for sure. It may be a little bumpy, but it may be a little bit bumpy, but it's smooth, it's smooth. Yeah, I know. Of course, they've been. Who else carrying the boat? Come on now. Nvidia, that they have to go ahead and take a break. That's why we looking like this right now. Nvidia saying, man, nah, I was carrying y'all a whole year. Tesla, cheese been sliding and ain't been getting back right again. Cheese been sliding onto the dirt for you. Seems like it's bearish. Seems like it's bearish. Yeah, it's dropping. So you see, Tesla tried to make a little bounce, right? All it did was rebalance the price, at least some liquidity points. But once again, you got another week and they fell into make new highs. What they got going on. Cybertrucks jumping though. I seen them Cybertrucks, they out here on the streets. They doing their thing. But once again, they are not making new highs. Nobody making highs in there. Let's see what Google got going on. I don't know. They ain't got sued lately, so yeah. See, the Mars, it's like they ain't even get no reaction. It's, got a little gap right here. But other than that, that's why I don't expect nothing out of NQ. I don't really expect they doing Broadcom. Yeah, yeah. See, they all on the same time. Right? They gotta surprise me. They gotta do something. They gotta do something. I don't see it. I don't see it happening. So this why I say I'm bearish, especially on the keys. That's a spot top 10. Pretty much those other people dragging down the spy. What Berkshire happened. This ain't nothing too bad with ain't nothing. I heard a couple people taking some profits, trying to get cash. They'll be fine. Apple this happened to have more spy have the Apple more weighted. So of course they're gonna hold up well. But Berkshire Apple, I believe, is carrying the boat for spy. Everybody still in a good position. But as you see, those boys like to copy each other, and that's why we had these problems. They don't have no standalone companies that's worthwhile holding up outside of these folks here. And when you say, well, just fill it up with this stock, fill it up with this stock, it's not creative. They have no edge. It's monkey see, monkey do. And that's the reason why the cheese sliding off the market. Then, you know, do about do, baby. Yeah. So when I tell you cheese sliding, cheese be sliding. Okay. And you can see that. Let me bring back my oscillators. Let me bring them back. For see that with your oscillators. See how skinny that is? We ain't got no money. See, when it was way back here, they still had some of that PPP money in the market. Then it was way over here. You know, it's that PPP money. P money right there, boy. Yeah. All them scammer money. All in the market right here. It was smooth. Everything was up. Yeah. Everybody knew what they was talking about. Everything was up. Mm-hmm. Yeah. So now, well, you know, good time growing up, baby. Mm-hmm. Boys can't get it how they used to. That's all I'm saying. So, yeah, just be mindful. Watch your oscillators. You see them in a consolidating point. Don't try to force trades. Sit out. Wait for the next day or even the next week. Wait for a better opportunity. Let the range really expand like it need to. I want to see 3 days of breakouts, right? At least 2 days of breakout, and then third day retracement or rebalance, and play it like that. I don't like seeing a lot of consolidation, a lot of inside days. All the reason why we had that new range expansion because of news, and it did it in both sides versus staying on one side of the market, right? And when I say that, that's what I mean. So let's go. We're gonna go back to the previous week. Oh, so on top, cut off this other stuff. Move up. Friday. Now, I'm just only gonna mark out the closes, right? To let y'all kind of know what time it is. So this is our Friday close of the previous week. Okay, we operating above it. So the auction process started on Sunday around the Friday close, continuing to Monday. So we start our week with Mondays. Oh, Monday close. Okay, great. What did we do? We broke out higher, right? Good deal. Still inside of Friday range. We didn't take Friday range. We put a really actually broke out of the previous Friday range. Right? That's another key you want to keep your eye on. Break out of the Friday range. That's what I mean. I don't want to see both sides get hit up. I only want to see one side. It's a one-sided game here. Right? I only want to see them go in one direction. That's let me know I got a good trade. Play it. Once again, we elevating, right? So this Monday, Tuesday, Wednesday, got our retracement. right? Rebalance, and then they went off. So that's what I'm talking about. On Wednesday, give a little retracement of the trend, right? Coming back down into an area. So from there, right? Because they broke out of Tuesday range. Tuesday broke out of the Monday range, and they kept the good times rolling. Okay, and then Friday rolled around. Guess what? It was outside the Thursday range. So you had all last week of bullish momentum. That's what I mean. I want to see this stepping process right here. I don't want to see inside process like this junk over here, right? So we come back to this previous week and we look at it. So we had a Tuesday close. Boom. Okay, great. This is midnight, right? For Tuesday. So I want to highlight this. Before Tuesday. Okay. This is your Tuesday around 8 o'clock. Give or take. Now Wednesday rolling up. Boom. Wednesday close. Still in that range, right? That. When did they break? Okay. This was the Tuesday high way over there. So we clearly see those going down. Right? You see them closing. Boom, they're going down. But you look at that. Wednesday, Thursday, coming into Friday, they finally broke down. But you had 2 days of consolidation. Anything can happen. It can go up. But this case, they broke down. Whatever may happen. But you just want to watch it. That means Thursday was not a trading day. It haven't broke out of nobody Wednesday range. Definitely not a Wednesday range. So we have situations like that that stay away. Stay away. All right. See, they operate around a Thursday, New York close. I mean, a Wednesday, New York close. It stayed around that area. You really go to it's consolidation. Trade. Come back the next day. Really actually do something. Do something for two something. Now, this is your Thursday close. Guess what? They broke down. See, that's what I'm talking about, right? So this is your Thursday Asian market, New London market breakdown. Boom, 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 boom. Then you get your pump. We test the Thursday New York close and then dump. You go. You know, you was already trailing low, so you had nothing to worry about. So stay smooth. Okay? You know, that's about my 2 cents. I'm gonna keep this going.